Stocks on Wall Street and Friday's trading session mixed as investors assess Trump tariffs threats. Dow loses 100 points. Asian markets open mixed as investors keep an eye on China's central bank benchmark rate decision. GIFT Nifty is indicating a lower start for the Indian markets. Crude oil prices hold steady as mixed U.S. economic news offsets new EU sanctions on Russia. Brent trades around $69 a barrel. Meanwhile, gold prices gain on the back of a weaker U.S. dollar. Reliance reports record quarterly profits thanks to one-time gain of 8,900 crore rupees from Asian Paints stake sale. Even adjusting for this gain, profits are up 20%. Rapid store expansion helps retail business revenue rise 11%. Mukesh Ambani reiterates the group will double in size every 4 to 5 years. HDFC Bank's net profit grows 12% on a year-on-year basis, while asset quality saw some weakness. ICICI Bank continues to spot strength profit and net interest income beat estimates. Asset quality remains stable. The monsoon session of the Parliament is set to begin today. Prime Minister Narendra Modi will address media ahead of the House proceedings. Trump's tariff, the Air India plane crash and Operation Sindoor will be the top of the agenda of the discussion. 15 bills are also likely to be tabled through the session. Hello, good morning. You've tuned into CNBC-TV18. You're watching Power Breakfast with me, Vinny Motiwala. An interesting day that's going to be shaping up today. A lot that happened on the global front as well. So let's look at how Asian markets have opened, right? Asian markets have opened up a bit mixed. While we're seeing Taiwan index that's down 0.3%, we're seeing Hang Seng that's trading with an uptick of around 0.5% in today's trading session. Similarly, the Australian index, ASX 200, that's opened with cuts of more than 1%, while we're seeing Shanghai that's managing to hold on to gains of 0.3%. We have Nikkei that's closed in trade. That's the Japanese index. And as of now, let's see what the Nifty implied open is doing, right? It's a very, very muted start is what we're watching out for. Not much of an uptick or a downtick that we should keep an eye out on. The last I checked, it was down around 0.04%. So, it will be important to see what the Nifty implied open is going to be indicating. But as of now, a muted start down 19 points is what the Nifty implied open is indicating for the Indian market. So, that is going to be interesting to see where we'll be headed during the day and during the week as well, given the mixed global cues. Now, in the US, when you're looking at it, what happened to S&P 500 and Nasdaq? That closed near the flat line. The Dows ended with cuts of almost 0.3% on Friday. This is overcoming a brief dip triggered by the news report of US President Donald Trump pushing for steep tariffs on European Union products. Now, the report adds that Trump was eyeing a minimum tariff between 15 to 20%, which sent the markets lower before they partly recovered in trade. So, flat, mixed opening overall is what we're seeing for the Indian markets. Now, when you're talking about the Indian markets as well, let's, get in how these overnight cues are going to be impacting our Indian markets. Obviously, we have a team of research, as always, joining in with us to set you up for trade, important stocks to watch out for, as well as what's going to be happening in the world of F&O. Gaurav as well as Sudarshan, good afternoon. But before I come to you all, I'm going to talk about what the trade setup is looking like for the Indian markets, given that, Indian markets actually, when you look at it, have underperformed this last week as well versus the Asian markets. Now, is that going to be continuing today will be key to watch out for, given that we're still watching out for a mixed opening. Even last week, we saw that fall coming in for the markets for the third straight week. So overall for July also, the markets versus Asian markets were a weak performance. Financials continue to be the top laggard last week. Sensex, Nifty, that also saw a fall coming in of almost 1% last week, while mid-cap was something that was seeing a rise. That was a bit of a bright spot. Now, in terms of FII, DII cues that we have, FII is bought 375 crores, while DII is bought 2,103 crores. But will this buying by FII sustain will be key to watch out for in today's trading session. We have a lot of reactions and a lot of factors to watch out for today. So that's going to be one in terms of India-US trade, that fifth round of these trade talks that are going on also. That was over. As of now, we have no deal that has come out yet. Key points are still left in terms of agriculture, automotive. That's still left to be decided. So will be key to watch out for in terms of what comes on that front. IPO listing of Anthem Biosciences. So keep an eye out on that. We have earnings reactions, important and big companies, right? Reliance Industries, HDFC Bank, ICICI Bank, among the top companies coming in with earnings over the weekend. So that reaction of that will be important in the market and will give a direction to the market as well. So keep an eye out on that. And earnings today, we'll keep an eye out on CIE Automotive, Ultratech Cement, Havells, IDBI Bank will be important to watch out for in terms of numbers that we keep an eye out on. Monsoon session is in the Parliament has started as well. Like I said in the headlines as well, a lot of bills that will be passed as well. So we'll keep an eye out on all that happening. But let's go over to Gaurav, who's here to tell us which are the important stocks to watch out for in today's trading session. How should we be watching out for in terms of what are we expecting here?
Well, yes, it's an important day for Nifty because big companies have come up with their earnings. First, let's talk about Reliance Industries. Profitability increased almost to around 26,900 crores, which was at around 15,000 crores a year ago. So a big jump. And with this, now Mr. Mukesh Ambani has also said that Reliance will continue its stellar track record to double every 4 or 5 years. So that is something that we will be watching out for. HDFC Bank also came up with the result. Good set of numbers is what we can say. Profitability increased almost by 12% on a year-on-year basis. And credit calls also remained somewhere in the range of what the street was expecting. ICICI Bank once again actually came up with a good set of numbers. We saw the bank actually beating expectations across parameters, and what was actually a key thing to understand is that the net interest margins actually declined only by 7 basis points. That was actually a huge positive surprise, and at the same time profitability also increased almost by 15% on a year-on-year basis. Bandhan Bank on the other hand, we saw a good set of numbers, but at the same time we saw some kind of concerns rising because of the asset quality. So profitability was above CNBC poll, but at the same time there are some stress which is rising in terms of fresh slippages because the entire slippage is coming up from their EEB pool. Other than that, AU Small Finance Bank is in focus, and the reason being that they have increased their credit cost guidance somewhere almost by 10 to 15 basis point to 1%. Net interest margins also declined a bit higher than what the street was expecting. So a little bit of negative reaction is what we can see in the trade today because the valuations are also a little high. On the other hand, let's also talk about some stocks which will be in focus on the back of the news flow. First, let's talk about Sona Comstar. Now, CNBC Newsbreak has been confirmed. Sona Comstar is going to enter in the Chinese EV market via joint venture. Company said that they will be investing around $12 million and will hold 60% of the joint venture. IDFC First Bank is also in focus. Other than that, BML, JSW Steel, Mahindra Lifespace, all these companies are going to be in focus today on the back of the news flow that we have received today.
Absolutely, Gaurav. Keeping an eye out on whole host of names, whole host of earnings reactions as well. But finally, we have Sudarshan here to tell us what should we be watching out for in the world of F&O. Sudarshan, we've seen that range-bound sessions continued for the market, and Friday was a lower session for the Nifty. What are we watching out for today?
Good morning, Vinny. So after being range bound for 2 to 3 days, Nifty has given up 25,000 for the first time since June 2024. And last week, if it was about reacting to IT companies' earnings, this week or basically especially today, it would be about reacting to heavyweight earnings like Reliance Industries, HDFC Bank, ICICI Bank, and in mid-cap space, Bandhan Bank, AU Small Finance Bank. So we'll have to see if Nifty managed to hold on to levels above 25,000. As far as GIFT Nifty is concerned, it's indicating a subdued start for today as well. On the flows front, in the cash market, you'll see both FIs and DIs buying. FIs have bought more than rupees 370 crore, DIs buying more than rupees 2,100 crore. But if you look at derivative markets, it's about that they are building on positions on the short side. So in the index futures, FIs have sold nearly 2,400 crore. They have reduced long positions of more than 2,300 contracts, and also they have added short positions of more than 10,000 contracts. And now FI's long exposure has reduced to almost 15%, which is lowest in last few months. As far as option market is concerned, now major action on the call side was seen in 25,100 call, which had seen addition of more than 54 lakh shares, and 25,000 call was active as well and has seen addition of more than 43 lakh shares. And on the put side, the most active put was 24,900, which saw addition of more than 15 lakh shares. So that's the reason support now for Nifty has moved lower to 24,800, and resistance is now around 25,100 or 25,150. Stocks that remain in the band are RBL Bank, Hindustan Copper and Angel One. One stock that entered in the band ahead of its earnings was Bandhan Bank. keep an eye on heavyweight stocks like Reliance Industries, ICICI Bank and HDFC because these stocks are the biggest contributors not only to Nifty and also to Nifty Bank as well.
Absolutely, Sudarshan. Thank you so much for that. Important to watch out for those stocks in FNO ban as well as in terms of the levels for support and resistance for the Nifty. Thanks for that, Sudarshan. But on that note, we're going to zip into a very short break, viewers. And after the break, we'll tell you how Reliance's performance was in Q1 FY26. So stay tuned in for that. Welcome back to Power Breakfast on CNBC-TV18. Now, Reliance Industries had reported its Q1 FY26 numbers on Friday after market hours. We have Sonal joining in with us to tell us how the consolidated numbers were looking like and what should we expect in terms of a move today. Sonal, good morning.
Good morning, Winnie. Well, Reliance reported numbers Friday post-market hours. In terms of revenues, it was largely in line with expectations. That came in at 2.44 lakh crore rupees. EBITDA came in higher at 42,905 crore rupees, which is higher on a YOY basis. Margins came in at 17.6%. And the net profit element at a record high this time around, 26,994. That was aided by higher other income as well. So other income came in at 15,120 crore rupees. And out of that, around 8,900 crore rupees came in from the Asian Paints stake sale as well this time. In terms of segments, the Reliance retail business saw double-digit growth this time. Their revenue per square feet increased by 16.5% on a YOY basis. Jio, on the other hand, reported inline numbers this time. Their revenue growth of 2% was led by higher subscribers and also higher ARPU that came by for the company as well. O2C EBITDA margin, it increased on a YOY and on a quarter-on-quarter basis, but do remember there was a maintenance shutdown that the company took in the month of April. Mukesh Ambani reiterated their plans of doubling the business every 4 to 5 years. So that was a big statement made again. In terms of brokerages, Morgan Stanley said that new energy, telecom, balance sheet, these were the bright spots in Q1 results. They have an overweight rating with a target price of 16.17. Jeffrey says that this time around O2C was impacted by refinery shutdown, but refinery outlook is quite constructive going forward. And now focus will shift on the AGM. Remember, it will be sometime in August or September. And the possible listing of Jio with tariff hike is something they'll be watching out for. They projected an 11% EBITDA growth in FY27. And Motilal Oswal says while first quarter was a little soft according to their expectations, they expect good growth going forward. And accordingly, they've also increased the target price on the stock.
Okay, Sonal, thank you so much for that. But let's move on to some other earnings that were reported over the weekend as well. HDFC Bank's Q1 numbers, how were they looking at? It seems like net profit grew by 12%. What are the other details in terms of asset quality? What should we be watching out for? Gaurav is here with us again. Gaurav, HDFC Bank, overall, how are the numbers?
Well, yes, we can call HDFC Bank as a good set of numbers for Q1. And the reason being that net interest income increased almost by 5%, which was in line. But there was another element of other income. There we saw a sharp spike. And the reason being that there was a stake sale of HDB Financial, because of which HDFC Bank recorded gains over worth 9,100 crores this quarter. And after that, when we exclude that gains, then also PPOP, which is pre-provisional operating profit, actually was higher than what the street was expecting. Other than that, when it comes to the provisions, what bank has done is that the 9,000 crores that they have gained from the deal, they actually made a floating provision out of that, and they have also made contingent provisions worth 1,700 crores, and that is the reason why provisions also look a little inflated. But if we exclude these numbers, then again the number remains in line with what the street is expecting. As a result, profitability increased almost by 12%, which was higher than the street's expectation. Now, there was a little bit of hiccup in terms of net interest margins, because they have gone down almost by 19 basis points, but brokerages believe that the core net interest margins have gone down just by 11 basis points, once again in line with what the street is expecting. Lastly, the management commentary remained very strong. What they have said is that in FY26, they will grow in line with the market, and in FY27, they will actually outpace the market pace. And at the same time, there are other factors to consider. First is that the bank has now declared special dividend of 5 rupees per share. And other than that, they have also declared bonus share in the proportion of 1:1. So that is something that will also cheer up investors. And as a result, we will be definitely watching out on HDFC Bank today.
Okay, keep an eye out on that one. But Gaurav, do wait by because ICICI Bank also reported its numbers on Saturday. You had a busy weekend. Tell us, what should we expect from ICICI Bank now?
Well, ICICI Bank once again came up with a good set of numbers. We have already seen bank delivering numbers which were higher than expectation for the last few quarters, and we can definitely say that the bank has continued the same trend. Net interest income increased almost by 11% on a year-on-year basis. When we talk about the operating profit, there also we saw 17% growth, and that was something positive because there was some push from other income as well. But even if we exclude that, operating profit growth was healthy. Profitability now that increased almost by 15% on a year-on-year basis. And what was the key positive is that net interest margins now they have declined just by 7 basis points, whereas Street was expecting net interest margins to decline almost in the range of 16 to 18 basis points. Another key thing to highlight is that there were some changes in the accounting policy, and as a result, management also stated that the net interest margin fall would have been somewhere in the range of 4 to 5 basis points if we compare on a like-to-like basis. So definitely that was something which was positive for the result. When we talk about asset quality, that also remained fairly stable. Gross NPAs were stable, net NPAs increased just by 2 basis points, and the loan book growth now that has continued to outpace the industry. That came in at around 12% on a year-on-year basis. Deposit growth was also strong at around 13%. So all in all, a very good set of numbers once again from ICICI Bank. And on the back of that, we already saw some brokerages actually increase their target price. So definitely this counter is also worth watching for today.
Okay. Thank you so much for that. We'll be keeping an eye out on both those banks on the back of its earnings. But staying with the banking space, now sources are saying that Axis Bank is expected to spike in bad loans and provisions in its first quarter earnings was not entirely result of the bank's own internal decision. Ritu is joining in with us to give us details on this one. Ritu?
Well, the surprising spike in bad loans which dented Axis Bank's profitability in the recently announced first quarter numbers that the bank attributed to a technical impact was actually not entirely a proactive move by them. We've been given to understand that this followed a regulatory intervention from the Reserve Bank of India, which had raised some red flags about Axis Bank's asset classification practices during a supervisory review in the January-March quarter of this year. Now, RBI found that the bank's NPA recognition policy was too lenient. While the bank was compliant with RBI's income recognition and asset classification norms on paper, we understand the regulator felt that the bank's internal policies were not aligned with the spirit of the regulation, and in some cases, this was leading to a delay in recognition of stress or even under recognition of stress in some cases. Particularly, this was seen in the unsecured retail and small business loan segments. So, in response to this nudge from the RBI, Axis Bank revised its internal framework, which then led to that 614 crore rupee hit to the bottom line, the additional 2,709 crores in gross slippages, and 821 crores in provisions because of the so-called technical impact. Now, on its part, the bank called the move a prudent application of enhanced qualitative criteria, which was aimed at making the balance sheet more resilient. Importantly, though Axis Bank's NPA recognition framework was seen as falling short of regulatory expectations, our sources have made it amply clear that they should not be compared with the IndusInd Bank case, where major accounting lapses have come to light. In Axis Bank's case, the issue was about policy interpretation, not financial misreporting.
Okay, Ritu, thank you so much for that. An important update coming in there for Axis Bank. Now, let's focus on getting you some trade-related updates. As August 1st tariff deadline looms, India and US negotiators conclude their fifth round of trade talks in Washington, D.C. Both sides are yet to resolve issues around the agriculture, automobiles, while decisions on interim trade deal is also yet to be taken. Government sources tell CNBC-TV18 that the fifth round of talks saw discussions held on trade, especially in terms of chemicals, organisms, material equipment, technologies, and as further talks are expected to continue with the US in the coming weeks, here's what the Commerce Ministry Piyush Goyal had to say.
There is absolutely no way we will compromise on the interests of our farmers, MSMEs, the interests of our workers. Our effort is to give them more opportunity, to give them more trade internationally, along with their growing markets in India with growing incomes. Our effort is to make sure workers get better, higher skilled jobs. Our effort is to get investments and technology. Our effort is to focus on innovation, like we did with the EFTA countries, Switzerland, Norway, Liechtenstein, and Iceland.
Okay, on that note, we're going to slip into a very short break, and after the break, we'll get to what's happening in the world of commodities. Stay tuned in for that. Welcome back and thanks for staying tuned into Power Breakfast on CNBC TV18. Now we have Manisha Gupta joining in with us as always to tell us what should we be watching out for in the world of commodities. Good morning, Manisha. Keeping an eye out on gold, crude and everything commodities. What are you focusing on?
Well, I'm looking at metals really, Vinny, because this is an area where we've seen gains come back into the markets. Well, remember, we're looking at better economic data from the U.S. markets, whether it was retail sales or jobless claims numbers. And then even as the U.S. is notifying over 150 trade partners on trade tariffs, the markets have seen a cognizance of that as well. So the copper prices in the U.S. markets are trading near all-time highs. Remember, the U.S. tariffs of 50% will be enforced from 1st of August. So the U.S. copper is trading at a premium to LME and Shanghai right now. But the other metals also seem to be doing well. You have aluminum trading at March highs. Zinc is trading at April 2025 highs, and steel futures in China also are trading at a 2-month highs. The markets are anticipating stimulus measures coming in from China. The China Politburo meeting also could be setting up standards for economic policies for the rest of this year, and the markets are quite positive ahead of that. When it comes to gold, well, after that profit taking in the previous week, we've started this week on a stronger note. Actually, when you look at silver, it's trading firm. Crude oil prices, after declining a percentage point in the previous week, also are trading firm. So most of the commodities have started Asia on a firm footing.
Okay, Manisha, thank you so much for that. So keep an eye out on metals and other commodities as well. Thanks for that. But on that note, we're absolutely out of time on this edition of Power Breakfast on CNBC TV18. Thank you so much for tuning in. Up next, to Bazar Call.